Ravi paid his car insurance for 11 years. Never missed a payment, never filed a claim. Then one night, a truck jumps the divider, totals his car. He calls his insurer, relieved, thinking, this is exactly why I've been paying all these years. They offered him 1.8 lakhs. His car cost 6.2 lakhs just 4 years ago. He argued. They said, "Sir, that's the depreciated value. It's in your policy." Ravi had no idea what that meant. Nobody told him. That story, it's not rare. It happens every single day. And after this video, it will never happen to you.
If you're paying for car insurance, health insurance, term life, or home insurance, this video is going to save you money, save you stress, and possibly save your family from a crisis they never saw coming. I'm going to break down 10 things across 2 parts that your insurance agent is incentivized to never tell you, not because they're bad people, but because their commission depends on your ignorance. Let's go.
Let me ask you something. How long have you been with your current insurer? 3 years? 5 years? More? Here's what they haven't told you. The longer you stay, the more you overpay. Insurance companies have a strategy, and they've been caught doing this in multiple countries. It's called price walking. Every renewal, they nudge your premium up. Just a little. Not enough to shock you, just enough that you grumble and renew anyway. Meanwhile, a brand new customer with your exact same profile gets a rate 20 to 30% lower than yours. Why? Because acquiring you cost them marketing money. Now they're recovering it from you. You are literally being charged a loyalty tax. The fix is simple. Every single renewal, get one competing quote. Just one. Either you find a better deal or you show your current insurer the quote and watch them suddenly find discounts they never mentioned before.
Secret number 2 is the one that makes people genuinely angry when they find out, because almost everyone watching this right now is affected by it. Pull up your insurance policy right now if you can, or do it after this video. I want you to search for 2 phrases: actual cash value or replacement cost. Here's why this matters more than almost anything else in your policy. Imagine your house catches fire. Your kitchen is destroyed. Rebuilding it today costs 8 lakhs. If your policy says actual cash value, your insurer calculates what your kitchen was worth after years of depreciation. Your 8-year-old modular kitchen? Maybe 2.5 lakhs by their math. That's what they pay. You cover the rest. If your policy says replacement cost, they pay what it actually costs to rebuild it today. 8 lakhs, full stop. Same premium, completely different reality when disaster strikes. Agents don't explain this difference at the time of selling because ACV policies are cheaper, easier to close, and the difference only becomes visible when you're already in crisis. Right now, find those words in your policy. If it says ACV, call your insurer tomorrow and ask what it costs to upgrade to replacement cost. It's usually a small difference in premium. It's a massive difference in your life.
Now, we've covered loyalty penalties and the ACV trap. Secret number 3 is something that shocks people the most because it feels completely backwards.
This might be the most counterintuitive thing I'll say today. Sometimes the worst thing you can do is use your insurance. Here's what happens when you file a claim, even a small one. First, your premium goes up. Not just a little, we're talking 20 to 40% higher at your next renewal, and it stays elevated for 3 to 5 years. Second, you get flagged. Insurers share data. In many countries, there are national databases like the Clue Report in the US, where every claim you've ever filed is recorded. Future insurers check this before giving you a quote. Third, and this is the painful one, file too many claims in a short window and your insurer can simply drop you. Cancel your policy entirely. And once you're flagged as high risk, getting new coverage becomes expensive and difficult. So what do you do with a small fender bender, a minor kitchen leak, a broken window? Do the math first.
If the repair costs less than roughly 2 to 3 times your deductible, pay it yourself. Protect your record. Save your insurance for the catastrophic moments it actually exists for. Rule of thumb, small damage equals pay out of pocket. Large, life-altering damage equals that's what insurance is for.
That's the first 3 secrets, and we're just warming up. Part 2 covers the life insurance trap that could leave your family with nothing even after you've paid premiums for 20 years. Plus, the one question you should ask every agent that they are trained to deflect. Here's a question nobody thinks to ask their insurance agent. In what situation would my claim be legally rejected? Go ahead, ask that next time. Watch what happens. Most agents will fumble, change the subject, give you a vague answer about terms and conditions. Because the honest answer, there are more situations than you think. And secret number 4 is the most devastating one because it hits families at their absolute lowest moment. I want you to picture something. You've paid your life insurance premium every single month for 18 years. You never missed a payment. You did everything right. Then the unthinkable happens. Your family files the claim. They're already devastated, already overwhelmed, and then, weeks later, they get a letter. Claim denied. How? Why? You paid for 18 years. Here's how. When you first applied for that policy, maybe 18 years ago, you filled out a health questionnaire. You might have forgotten to mention that you occasionally smoked, or that you were treated for high blood pressure, or that your father had a heart condition. Not intentional, just forgotten, or assumed it didn't matter. The insurance company calls this material misrepresentation, and buried in your policy is something called a contestability clause, which gives them the legal right to investigate your original application and deny the claim if they find any discrepancy. They have entire departments called Special Investigations Units whose sole job is to find these discrepancies after someone dies. This is legal, this is common, and almost nobody knows it exists. What to do right now? Pull out your original life insurance application. Read every answer you gave. If anything has changed, your health, your habits, your lifestyle, contact your insurer proactively and update your records. And update your beneficiary nomination every single time there's a major life change. Divorce, remarriage, a child born, a parent passed. Outdated beneficiary, your payout goes into legal dispute, sometimes for years, while your family waits. I know this is heavy, but stay with me, because secret number 5 is actually something you can use tomorrow morning to immediately put money back in your pocket. No waiting, no paperwork, just one phone call. Insurance companies have discount programs that agents are not required and often not motivated to proactively tell you about. Why? Because discounts reduce your premium. Lower premium means lower commission, so unless you ask, many agents simply won't bring it up. Here are discounts that exist right now across most major insurers that most policyholders have never claimed. No-claim bonus transfers. If you switch insurers, your no-claim history can transfer with you. Most people don't know this and assume they'll lose their bonus. You won't. Telematics or low-mileage discounts. If you work from home or drive less than average, many auto insurers will monitor your driving via an app and slash your premium by up to 25–30%. Profession-based discounts. Teachers, doctors, government employees, and engineers get preferential rates with several insurers. Nobody advertises this. You have to ask. Security feature discounts. Installed a dash cam, home security system, smoke detectors, deadbolts. Each of these can reduce your premium. You have to tell them. Annual payment discount. Paying monthly is convenient but expensive. Switch to annual payment and most insurers drop the rate 5–8% instantly. Here's a script for tomorrow's phone call.
Call your insurer and say, "I'd like a full list of every discount I currently qualify for and every discount I might qualify for with small changes." That sentence alone has saved people thousands.
This might be the most important mindset shift in this entire video, so I want you to really hear it. When your insurance agent sits across from you, smiling, helpful, walking you through options, they feel like they're on your side. They're not. Not because they're dishonest, but because of who signs their paycheck. A captive agent, someone who works for one specific insurance company, is legally and contractually obligated to represent that company's products. They cannot offer you a competitor's better policy, even if they know it exists. An independent broker has more flexibility, but they still earn commission on what they sell you. The more expensive the policy, the better for them. There is one type of advisor who actually works for you, a fee-only insurance consultant. You pay them a flat fee. They earn nothing from the insurer. Their only incentive is finding you the best possible coverage. Most people have never heard of this option. Most agents will never suggest it. Now you know it exists. The question to always ask any agent: are you a captive agent, an independent broker, or a fee-only consultant? Their answer tells you exactly how to interpret everything else they say.
6 secrets down, 4 to go. And part 3, the final section, is where we get tactical. I'm going to give you the exact questions to ask before signing any policy, the insurance products that are almost never worth buying, and the one clause you need to add to every policy that most people don't even know exists. Part 3 is the most actionable section of this entire video. It's also where I'll tell you what to do if you think you've already been cheated by your insurer and what your legal options actually are. Reply "Continue" and I'll deliver part 3 right now. The final section that ties everything together into a complete action plan you can use immediately. We've covered loyalty traps, claim denials, hidden exclusions, commission games. But here's what nobody else will tell you in these kinds of videos. Knowing the problem isn't enough. You need to know exactly what to do about it, step by step. So this final section, no more theory, pure action. Secret number 7 is something that could affect every single person watching this, and most people discover it only when it's already too late to fix. The insurance industry sells products that sound protective, but are statistically almost always a bad financial decision. Here are the biggest ones. Number 1, mortgage protection insurance sold at the bank. Banks push this aggressively when you take a home loan. It sounds logical. If you die, your loan is covered, but the premium is high. The coverage decreases as your loan balance reduces, and the beneficiary is the bank, not your family. A simple term life insurance policy gives your family the money directly and costs a fraction of the price. Number 2, credit card insurance. That small monthly charge on your credit card statement, insurance cover for outstanding balance in case of emergency, the claim conditions are so restrictive that payouts are rare, pure profit for the card company. Number 3, extended warranties sold as insurance. On electronics, appliances, vehicles, the markup is enormous. Statistically, most products don't fail within the extended warranty window. Manufacturers already give you a standard warranty. This is almost always unnecessary. Number 4, return of premium term plans. These promise to return your premiums if you outlive the policy. Sounds great, but the premium is 2 to 3x higher than a regular term plan. If you'd invested that premium difference in a basic index fund instead, you'd have significantly more money at the end. Rule of thumb: if an insurance product is being pushed hard at the point of another purchase, a loan, a credit card, a new appliance, walk away and research independently first.
Secret number 8 is the one my own insurance agent got visibly uncomfortable when I asked. I'm going to give you the exact words to use.
It's called a waiver of premium rider, and in some policies, a critical illness rider. Here's what they do. Waiver of premium. If you become seriously ill or disabled and can no longer work, this clause waives your future premiums while keeping your policy fully active. You stop paying, coverage continues. Without this, you get sick, lose income, can't pay premiums, policy lapses, and you lose coverage at the exact moment you need it most. Critical illness rider pays you a lump sum upon diagnosis of specified serious illnesses, cancer, heart attack, stroke, kidney failure. Not after treatment, not reimbursement, a lump sum immediately upon diagnosis. This money covers things health insurance doesn't: lost income, home modifications, experimental treatments, family travel for care. Both riders cost relatively little added to your base premium. Both are transformative in a real crisis. Here's a script for your agent. I'd like to add a waiver of premium rider and review critical illness rider options on my current policy. What are my options? If they seem hesitant or try to redirect, ask again. You're entitled to know every rider available on your policy.
If your claim has been unfairly rejected, or you feel your insurer has acted in bad faith, most people just accept it. They feel powerless, they don't know the system, and insurers count on exactly that. Here's what they don't tell you. Step 1. Internal escalation. Every insurer has a grievance redressal officer. File a formal written complaint, not a phone call, a written complaint with your policy number, claim number, and a clear timeline of events. Written complaints trigger legal response obligations. Step 2. Insurance Ombudsman. In India, there are 17 insurance ombudsman offices across the country, a free, government-backed body specifically set up to resolve disputes between policyholders and insurers. Filing is free. The process typically resolves in 3 months. Insurers take it seriously. In the U.S., every state has an insurance commissioner's office that performs the same function. Step 3. Consumer Court. For larger disputes, consumer courts have ruled against major insurers repeatedly. Documented cases of bad faith claim denial have resulted in insurers paying not just the claim, but additional compensation for mental harassment. You are not powerless. You just weren't told the rules. Keep every document, every email, every call recording if possible. The moment you feel something is wrong, start building your paper trail immediately. Last one, and in some ways the most actionable of all 10. Once a year, every year, you should conduct what I call an insurance audit. 30 minutes, no special knowledge needed, just these 5 questions. Question 1. Has my life situation changed? New child, marriage, divorce, new home, salary change, aging parent depending on me. Every change affects how much coverage you need. Question 2. Am I overinsured anywhere? Collision coverage on an old car, riders on a policy that no longer makes sense, premium going to coverage you'll realistically never use. Question 3. Have my premiums increased without explanation? Pull last year's premium versus this year's. If it's up and you haven't filed claims, demand a written explanation. Question 4. Are there new products in the market that serve me better? Insurance products evolve. A policy you bought 7 years ago may be significantly inferior to what's available today at the same price. Question 5. Are my nominees and beneficiaries updated? This one question alone could prevent years of legal heartache for your family. Set a calendar reminder. Same date every year. Call it insurance audit. 30 minutes annually could save your family from a lifetime of regret. 10 secrets across this entire video. Let me leave you with the one thing I want you to remember above everything else. Insurance is not a product. It's a promise. A promise that when the worst happens, you and your family will not be financially destroyed on top of everything else you're already going through.
But that promise only holds if you understand what you signed, if you know what questions to ask, if you know your rights. Your agent has training, experience, and an entire industry behind them. Now, so do you. Share this video with one person whose insurance renewal is coming up. Not 10 people, just one. The right one. It might be the most valuable thing you do for them this year. And if you want part 3 of this series, where we go deep on health insurance specifically, the tricks, the hidden sublimits, the cashless claim traps, comment the word health below. If enough of you say it, that video goes live next week.